it comes down to this idea that you can just, if you want to pick stocks and be successful, you just do the research. I genuinely think this is overrated. It's almost like, it sounds too easy. It says, if you don't want to do the work, you just pick index funds. If you do want to do the work, then you can pick stocks. But what does that, I don't, to this day, I don't know what do the work means.
People can't even agree on what research is, because you'll have like discounted cash flow models, you'll have like bottom up, you'll have like, fundamental analysis. There's like schools of thought within research.
Because think about this, right? You could be a top accountant and go through all the books of the best companies, right? But that doesn't mean that you know what's going to happen next to the share price. Because if it was, then all the best investors would be accountants, but they're not. Mm-hmm. Likewise, all the best investors aren't from one demographic or similar person. So then it makes me think, again, comes back to being able to pick someone or be consistent with finding that person. It's like, what does that even mean? So that annoys me a little bit. And most books don't say that, but there are some books which are trying to encourage trading, and from a short-term perspective, convincing people almost that, I mean, they've all got a course to sell, but convincing people that if you just do their method and you become a value investor and you look for these ratios, you'll find good companies. But some companies are cheap for a reason. Others may not. You agreed, like the COVID dip. You think you could have bought good companies then, but that is probably the worst advice, I would say. Because it can mean anything. Like you said, do your own research. What does that mean?
It's almost like a disclaimer.
It is.
Not advice, bro. Do your own research.
And it's a shame we have to say that, because you do need to do your own research. But it's like, well, where do you start?
Someone asked me on LinkedIn, like, oh, how do I start researching crypto? And I'm like, I need to write a
Don't
page.
be messaging.
I was like, look, like the amount of research you need to do, I can't even describe it. So I don't even know how to answer this, because like you have to like embed yourself in it. And I still got scammed in crypto. So like,
exactly.
It's like,
and even the flip
you can't
side,
answer that question in a page. That's what I mean.
But then the flip side, so and I forget which book this was in, but again, it comes down to like experiments. They let a couple of completely just ignorant, I think it was a couple of housewives in America basically just pick some stocks, right, against hedge funds. And they just pick random stocks. They think, oh, like, I like that product. It's like in the 1980s. It was like a clothing brand. They're like, oh, it's like the Gap. I like the Gap. So they picked the Gap, and these other hedge fund managers trawled through all the data. They picked their stocks, and the women won over like 5 or 10 years.
It's like the monkey with throwing darts.
It's like the monkey with throwing darts. Yeah, like if we're all monkeys and we're all throwing darts, someone will get the best picks, right? Someone will smash the market, and everyone will look at them thinking, oh my God, they're amazing. I better copy them.
How did he throw the dart?
How did
he holds it like this.
Yeah.
And
exactly. He had a toke on a cigarette before he threw it. Like,
exactly. They'll analyze it, and then the monkey also might get a bit arrogant. They might be like, well, I'm pretty good at this actually. I should do this for a living and charge money
buy
for
my
it.
course.
Yeah,
buy my course, I'll teach you how to throw that dart.
I'll teach you how to do it.
But then again, with all these courses, if you're so good and you're making so much money, why are you selling the course? Why don't you just keep doing it every day? Just doing
Jim
your course
Simmons, is it?
And making
Jim
millions.
Simmons
Jim
with
Simon's
the quantitative fund. He locked himself
fund.
away and didn't tell anyone what he was doing. He's the example of a guy who probably knew how to beat the market.
Yeah, super clever guy. This was like the first days of quantitative trading, so using computers and algorithms to basically do short-term trades and beat the market. Now, effectively, yes, Jim Simons is one of the only examples who've really done this. But that is definitely more trading rather than investing. So they're not holding off stuff for the long term. I believe he compounded his fund, not compounded, but every year. It's like 60% a year.
Yeah.
But not compounded, but every year using the same amount of money.
Shorter career than Warren Buffett, but more higher percentage return. And he died. He's dead.
He's
dead.
Like,
but he's a guy that you could go, he knew how to beat the market. And he wasn't selling a course on it. He locked himself in a room and made money.
Yeah, like they kept those algorithms locked down.
That's what everyone would do.
Because again, if you do, let's say, I'm sure there are patterns out there which some short-term traders are using, which are working like 90% of the time. I'm sure there's probably something out there. An event happens in the world, because these algorithms are so smart now as well. So you've got to think, if you're going to be a trader, you've got to compete with all these things, because most trading now is automated. It's done by a computer or an algorithm somewhere. I mean, there's even software out there that I know of, it's scraping Twitter, it's scraping the news, it's looking for different keywords about certain stocks, certain events, because that data is then sold into these firms who are then using that to trade. And
they scrape Wall Street bets.
They scrape everything, yeah, exactly. So they're looking for sentiment, because they're not long-term investors.
It's in and out,
they're trying to get in
swing
and out.
Trades and little.
And you might see some of the hedge fund as well who you might have heard of something for buying the order flow or profit for order flow. What's the real technical term?
It's payment for order flow.
Sorry, payment for, not profit for order flow, but they do profit from it. But being able to pay for the orders up front from a broker. It's actually illegal in the UK. I
It's how
think it might be
Robinhood
legal in
makes their
Europe.
money. It's how Robinhood makes their
Yeah.
money.
So you sell the orders to a company who gets to see the orders in advance. They know that lots of buys or sells are coming in, and then they can front load their orders.
That is cheeky.
And that's legal in America, which is crazy.
They're also the market maker.
But they're the market
They're the
maker as
person
well.
who places the order. So, you know, they
Then
make...
I'll put my order here, then put all these buy orders right after my order.
I'll place an order in front of that.
Yeah, and then just drop them all in.
So you could argue they're beating the market, but not in a
They are the
traditional way.
market.
They are making the market, and you could argue, well, whether that's right or wrong. But
that was a clip from our chat with Toby Newbatt, personal finance YouTuber. To watch the full episode, click right here.